Hey all, welcome to Bro Billionaire. This is another episode of wonderful learning about the market structures and the indicator, right? But today I'm going to bring you something which you all know, but most of you don't know how to use it. The RSI, Relative Strength Index. Don't be disappointed. Don't think you know everything. Watch this video till the end and see whether you are using it the way you are supposed to use it. With pivots, Camarilla float pivots, this can be a deadly combination where you can never go wrong. Now, before going further, last Sunday I had introduced you a new trending indicator called guppies. I told you that this was one of the financial consultant who had introduced this, and it is very effective to catch the trend. So last Sunday, so this was introduced on 17th, right? If you see the video, last Sunday was 17th. So we have 5 days. In these 5 days, I just wanted to quickly tell you, suppose if you were using it, I'll tell you why I want to review it. See, this is 18 huge gap down. Market comes down and goes sideways, where most of you, especially if you are in an option trading, you will be what do you call it, you'll be a little tensed. Oh, whether to go up, whether to go down. This is guppies with 20-day moving average. This is float pivots, but you know below 20-day moving average is downtrend, but still, if you're not an experienced pro, you will have butterflies in your stomach. Now what is going to save you? It is these guppy indicators. As the lines and the distance keeps enlarging or broadening, widening, the trend is that much stronger at that side. So in a trend, you have to stick to the trend. So this is a trend indicator, and if you're downside, you will take the trade, and when all these small lines converges like here and here, you will exit the trade about 20-day moving average and close it. I'm not advising any counter trades. Understood? So first day you had a big money if you followed guppies along with 20-day. Now the Tuesday where you had around 200, 300 points fall in last 30 minutes. So sideways, sideways, sideways market gives widening here. So you had money till here. Again is converging. You will exit. This is R1 pivot, you know. Somewhere here again it goes, tries to break, converges, you will exit. Now when these things are converging, the guppy both, you know, this is the longer moving average and this is the shorter moving averages, and these are supposed to be most accurate. When you combine this, see here, the crossover has happened, and you could have just gone along with the guppies to capture the 300 fall. What happened next day? Market is in range bound. So if you're still waiting for complete crossover, somewhere here, scalping, no trade. Here, no trade. Here, no trade. This is a no trading because there is no trend here. Please understand. Guppies or any trending moving averages works only when there is trend. So this will clearly tell you when there is a trend. See how broad and the lines are going. And what happens here? Above R1 pivot. Now here, even if it is coming sideways, market went very sideways. Just watch the guppies. These lines, the distance between the red and these sky blue lines, you know, you can see trend is only in one direction, and in between 20-day moving average is acting like a median or Lakshman Rekha. You could have captured this big money. So out of 3 days, twice it worked. On the sharp fall day, it worked almost 3 times. Now this was yesterday. Now here, first half, there is no trade. Trading is all about waiting. So here it slightly tries to expand, but still no trade. You don't see the visible gap between the lines. The gap is here. When the price comes below 20, this is where you have a big gap. So probably this gave 50 points. Now, if you're following this indicator, you need to stick to the rules. So one is, I told you, whenever a crossover happens in near the CPR, if the candle has opened here near CPR, you have a trend. Near the pivot, the crossover is happening. Near the range breakout, if the crossover is happening, you have more money. Okay, somewhere here, this is the range. See, this entire thing is a range. The crossover has happened before the range. So you have more money. So this is exactly the rules. There are 3 rules I told you, and if you follow and stick to it 100%. Now you may have to wait for 2-3 days. If market is sideways, maybe you don't have any trade, your stop loss will get hit. But when the trade comes, you have the complete opportunity to take the entire amount, right? So why I explain this is because if you are a trend trader or if you are using any indicator, you need to stick to the rules of the indicator, know how to use the indicator, what are the situations you should be using the indicator, then only you will be able to master that indicator, especially if you don't know price action. All right, now my motto was to introduce you to RSI. Now, before RSI, there was another video which triple EMA 5, 15, 34, and 20-day moving average. Yesterday, I showed you I captured 60 points. First here, I captured 35 points. This is a morning range. This is the purple line is 5 EMA, red is 15 EMA, the blue is 20, and black is 34. The purple and the red, when the purple crosses above the red, which needs to be in order, this is 5, 15, crosses about 20. This is where I knew when it crossed, okay, this range is getting broken. The first 5 minutes candle is broken. This is the support. So I'm going to take the trade here. So from here, in this candle only I enter till here, I got around 35 points. Now here near S4, watch this line. I have marked it for you. The purple crosses the red below 20-day, but it hits the stop loss here by going back. Now, this is where the indicator or most newcomers lose trust with the indicator because they don't understand it. This is a range bound, but even when you see 1, 2, 3, 4, the peaks are going lower, 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 right? The peaks are going lower, lower, lower. And when you draw a channel, the channel break, there will be a channel breakout, and this channel breakout you can consider as taking the money. No, but what I want to show you is in this range breakout, there was a rule. So most of you in the video, you might have not paid attention to this black 34 EMA. What is the job of this black 34 EMA? The job of this black 34 EMA is to show you the trend is very strong. See here, the trend is not strong because 34 is above, but trade has triggered, and as per my advice, take the trade. Here also take the trade because you have a lower peaks, and RSI divergence was there on 5 minutes. But when you hit the stop loss, don't lose confidence, just wait. Now see this blue line coming below black line after this big fall. Here, red and purple, the 5 and 15 are widening here. And when the blue line comes below, when this started falling below this, I entered, I captured 30 points here. I was done with 60 points. If I had waited with the 5 EMA, what is your stop loss? Either above 15 EMA or when the candle closes above 5 EMA in a very strong trend. This is a very big candle. Nobody can go above this. It came closer with an inside bar. I told market will pull back, but it just came near 5 EMA, responded, went down. You had another 20-25 points here. This is exactly how you're supposed to trade. All right. Just wanted to show you guys on these 2 indicators. You can use any indicator. Now to adding this indicator, if you add, everybody knows RSI. RSI, what is RSI? What is RSI? RSI is relative strength index, right? In this, I have a moving average. I don't want moving averages. Don't use moving averages. Remove the moving averages. Just keep only RSI. And 60 and 40 setting should be there for option trading. If you're trading in stocks, you can keep the default 70 and 30. What exactly it means? I will show you above 40. This is 50 line, just to show you. The middle is 50. So these 3 levels are very important for me. 40, 50, 60, right? Now, if you know Camarilla pivots, it's a very simple video. It won't take more than that. You will be able to quickly understand. Below 60 is a strong trend. Below 40 is a strong downtrend. Above 60 is a strong uptrend. So in this rule, you need to understand how exactly RSI works. Now here it is setting. So I use the combination of it, right? I use the combination. So this is setting. If you want to use triple EMA, use. If you don't want to use triple EMA, don't use. But I'm giving you an idea. So you need to be able to filter out the information. You can use only 20 EM moving average as well, right? Now watch here. Morning candle comes. This is previous day low, previous week low, and you have S5 Camarilla pivot here. Now this is a support, right? This previous day low is acting as a support. Now what here? It is highly in oversold area near 16. Instead of trend going down, it starts moving up. Watch here. This is a divergence, right? Market is going above. Now when it's taking, see, it comes, this is an inside bar, market gives a morning star kind of stuff, then comes go low. When it comes here, just don't watch the crossover. If you watch the strength, RSI measures the strength of a trend. If it is downtrend, the strength would not weaken. It will not go up. That is what means divergence. So market is in downtrend, but the RSI momentum is dropping. Now when the RSI, this is all on 5 minutes closing basis, which means you have to wait for a trade until 5 minutes is closed and you initiate the trade in the next minute. See here, when the RSI crosses above 30, from oversold area, sorry, above 40, I beg your pardon, this is 40, the trade is initiated. Now in this zone, either you can trade blindly. What will be a stop loss if RSI on 5 minutes closing basis comes below 40? Now I want you to focus on this thing. When it crosses above 40, watch the 20-day moving average. If the price is above 20-day moving average, your trade is triggered. I'm talking only 20-day. I'm not talking about crossover. But you can add a crossover and you can take the trade with crossover because you have double confirmation. But for me, this pivot itself is a confirmation, the candles, pivot, and this range breakout. Now, this is useful for a beginner if you want to make your system complicated. I don't want to make my system complicated, but I'm trying to help you. This is the range. When this range is getting broken, I will go long. Or here, I know this is a strong. I have previous day low, previous week low, and I have 3 supports here. So it's very difficult. I will take my bet with this inside bar. My stop loss will be below first 5 minutes candle. That is how I will trade, or a price action trader would like to trade because he wants a minimal stop loss, less stop loss, and a counter trade opportunity. But anyway, you understand, don't get confused by that. If the RSI moves above 30 and if any candle is above 20, your trade is triggered. What will be a stop loss? The next pivot or the next selling zone. See here, this was a reversal pin bar where market came down on the previous day, took support and went up. That is the area I have marked here. If you understand the buy and sell areas, there are separate videos on our channel. I have created, that's exactly where market is resisting because it's a supply zone. Now here you can blindly exit or wait for RSI to come below 60. See here, it comes below 60, exit. That's all, exit. Don't think about counter trade until unless market sustains above the peak of this peak or this peak. The reason this peak is the momentum should be strong enough telling you that, okay, there is strong buying above this peak, hence you can enter it. See here again, market went up, it tested twice. Where is RSI? Below 40. Third time, fourth time, the peaks are going down, which means the momentum is dropping. Now here, when will your trade initiate? The next trade, your next trade should be on 5 minutes closing basis below 50. Here, the second marking zone, there is a crossover below 50. Your stop loss should be when the crossover goes above 50 on closing basis. Somewhere here, your stop loss gets hit because it went up. Understand? Stop loss, don't worry about it. But the next trade will be when again it comes below 50. For you, the confirmation is crossover. This is a sideway. Don't worry. Even with this reversal pin bar, I had 10 points. I lost 10 points plus 3 points in this 5 minutes and took the stop loss because it had broken the pivot. See, price came till here. So I anticipated price to become a range bound, but it did not work. So I took a stop loss here. So don't worry about stop loss. There is no trade without stop loss. Every trade is a risk. Now your next trade will be when the market comes again below 50 here. Take it, confidently take it. Keep your stop loss above this peak, similar to the peaks on the chart, RSI peak, because I want the momentum to break above this peak so that you have a counter trade opportunity to recover your stop loss. That is how you should be trading. Hope I'm making it clear. These are little advanced concepts. But what happens here? Market comes, it's staying below 50. Hold your hand. Don't hit the exit button. Just hold it. See, once it comes below 40, when is your stop loss? The RSI should go above 40. Did it go above 40? It went here. So somewhere here, you will close your trade, end it. Or if you have made 1:2, 1:3 profit here, just close it here with this big candle and then the another green candle testing the low. This is the extreme reversal, if you understand, because market went down and closed above. So I would have exited here, but anyway, your proper exit will be here or about 5 a.m. Understood? See this one, watch this one. Strong trend. You're all shit scared. You're all shit scared. Oh, market can go down. It's all of a sudden, what happened? What happened? So Camarilla above R4 is breakout, but above R4 it took around 15, 20 minutes or 30 minutes. But what is giving you the idea? The idea is market in the first reversal pin bar is above 40. You can take the trades. In the real time, market comes down. Sometimes with this green candle, there are possibilities that it is below 40 as well. But when you wait for 5 minutes closing basis, it always goes up. So that's the reason why I'm telling, wait for 5 minutes closing basis. In real time market, the experience will be different. So when the RSI comes below 40, you will be itching to hit exit. You're afraid, oh, I'm losing. No, wait for 5 minutes closing basis. It comes down, then goes up. If it comes down, exit, don't worry about it. You have the least stop loss. Now go back to all my videos, the first 5 minutes magic or 15 minutes magic. You will be able to understand why I have come up with those strategies. If I explain everything in 2 hours, you won't be able to grasp everything and you will not be even interested. Even now, this video itself is lengthening, right? You'll be bored because you want to skip after strategy after strategy after strategy. That's the reason I showed you the 2 strategies, how they work if you stick to the discipline and if you know how to use the strategies. Likewise, this RSI here, previous week, these yellow dots are previous week, above R3, below R3 is selling. Yes, below R4 is selling. But you wait for this candle. When the R4 is broken, you will enter. But RSI is already telling you momentum is on the buy side, is very strong because it is above 60 point. Even if you entered in the first 5 minutes candle, this candle came down and closed, but RSI is not showing any weakening in the momentum, because if there was any weakness with this red candle and this would have come below for 60 and it would have been a signal for you to exit. And then see what happens. Entire day it is above 40, above, gone. You have 20 moving average, you have 5 and 15 triple EMA, everything running in parallel. 34 and 20 running in parallel is a strong indication. Your stop loss gets hit here with these 3, right? Momentum is weakening. That's it. You have to trade as less as possible with 1:2 or 1:3. Close the day. You exit here. Namaskar. End it. Don't worry about these things. Watch here. This is a range bound day. Now in a range bound day, you have a very strong reversal wick. Now here on a range bound day, none of the EMAs will work because it's a range bound day. Remove the EMAs. Above 30, your trade is triggered. Above R3 is buying, enter. Now, once it goes above, it's not going above 60, but it is hovering around 50, right? So when it comes below 50 should be your exit. This is very important, understand. The momentum, if it is not going above 60, and if it is stuck in between, which means on that day volume is very low, whenever the RSI comes below 50 line, the center line, exit. But you know above R3 is buying. And whenever a 15 line goes above R3, see here, this is R3. Watch this one. You'll be surprised. This candle is breaking R3 and RSI is above 50. So enter. So with the combination of pivots and RSI, you have a deadly combination. See, it went up. When will be a stop loss? As soon as you see the price action, you find your stop loss should be R4. But what happens here? Market is coming. You enter here, your stop loss is hit here with this candle. Still, you have made some negligible amount of money. You're not in any kind of loss. This is range bound. If you understand range bound, this range was broken when this candle comes below the range, it exits. So you would have made your money from here till this length. That is how you should master the range bound trading. This one, right? See this one, the sharpest fall. Forget about all the indicators. Now I'm using only RSI and this one. So if you want, I'm telling you, if you want, use 20-day moving average. It is the most simplest moving average, and this will be our last video. Okay. I'm sorry, last chart analysis. I don't want to bug you more. Overbought above 70. First candle closing below R3 is selling area. RSI is below 40. Now tell me, where did RSI go above 40? RSI went above 40 here. When this was broken, it tried to break here, came down. Since you have a pivot with this went above, you will enter your trade. It goes up, comes down. It came below 40, hit your stop loss here. One stop loss hit here. Okay. Then it goes above, you will enter again. If this peak is taken out, this peak, remember, suppose if you are very smart person, you will wait for the first candle momentum to be taken out. If you remember the first candle magic, market can reverse only above the first candle, mean revision, above the first candle high. The first candle opening and the breakout twice. See, this is above this. Momentum is not showing. Market went even above with strong momentum candles. See here, momentum is down, but still, if you mark the first 5 minutes here, I wouldn't suggest any trade. Allow the market to come below. Now here market again went about 30, but I don't have any 20-day moving average or any pivots. So I am not going to trade this. I am not a price action trader. Here I'm using an indicator. It comes here above 50. Okay, somewhere here I will enter. Watch this. A rule is a rule. Understand, guys. The RSI goes above 50, and here the candle breaks the R3 and the 20-day moving average. I will take this trade. Market goes up, my stop loss will, when the candle comes below 40, fine. Now here understand, it goes up, comes down, goes up, comes down. Goes up, comes down, goes up, comes down. Above 40 or below 30, whenever this thing happen, twice goes up, comes down, goes up, comes down, be aware, forget that side of the trade, which means market went up, comes down, I made some negligible amount of money, again goes up, no, I'm not entering. I want either the pivot to break or the previous peak. Remember this, it's very easy to forget it. The previous peak should be broken. See here, these peaks are here. Although the candle is above this, high is broken above this, it is below, so the momentum is still lower. So I would ignore such trades because most of the times it will be a trap because RSI is not confirming the momentum. That's the reason why I'm talking so much. Now here your counter trade is initiated when the pivot, see here, yeah, this one, and RSI is below 40. This one was your counter below 50. It came, went, so your stop loss will be above 50 or above 20-day moving average. See, this went above 20-day, the line would have gone above 50, but at the closure time it did not cross above 50, and then you knew market is in sharp downtrend. Once it crossed 40, you had big time money. This is how you're supposed to trade, guys. RSI, whenever, see here, support, RSI is below 40, market goes up, okay, you have some negative divergence here, but has it initiated a trade on the buy side? Now if it is above 40, it comes down, and above 40 taking support, above 40 breaking 20-day moving average, you have a trade. Even if it is pulling back, right, even if it is pulling back, there's no trade, guys. There's no trade. The momentum is still strong downside, so you have to wait patiently. Wait patiently for candles to come to 20-day moving average or break the low and then take it. So below, see, this is a confusing situation. It is down. Should you take a trade or not? You have to take a trade on the downside. Your stop loss will be when the candle goes above 40. So if you have taken a trade on downside somewhere with this double top, there's nothing else. You can use 5 EMA here. This is where the 5 EMA comes into picture, 5 and 15. So that's a reason why I use certain things. If you don't know price action, these things will be useful. See here, 5 EMAs. It's a momentum indicator. It's strong. You could capture this. Even with this, don't worry, don't worry, don't worry. Somewhere here, you will exit. Again comes closer, the crossover is happening below 20-day moving average, below 20-day, you take that trade. The next stop loss will be when the candle goes above 40. I'm not suggesting any counter trade because this is in downtrend. Counter trade can happen when the crossover happens, and if you are a risky guy, you want to take counter trade, year 5 and 15 has crossed 20-day moving average, you can take it here above 50. Your stop loss will be below 50. Counter trade should be quick. Or if it goes above 60, stop loss should be when the candle comes below 60. That is how you're supposed to trade. This is a wonderful indicator. RSI is in itself is a, what do you call, like a Wikipedia. It's a, there's a lot of usages using RSI, right? So hope this video was useful. Although it was a little lengthy, I wanted to take some time to explain you the concepts. If you have still not understood, you can post your questions and I will be answering it on the channel. Thank you guys. Have a good day.